So in the overnight session, the market has been balancing within yesterday's range, and so far the Russell has continued to show signs of weakness, and the Nasdaq seems to be primed for a directional move, which could happen today or perhaps tomorrow. What we know is that volatility contraction often leads to volatility expansion, and the markets are not going to remain stuck in this narrow range forever. So I think we should be on the lookout for signs of directionality, because those are the days when zone fades don't really work all that well. So if we know that below the surface there is a directional move brewing, then at least we can be on the lookout for signs of directionality. And if we notice those in real time, then at the very minimum, it can perhaps save us from unnecessary losses, and ideally, we are able to get on board that directional move. So as we head into the open, our intermediate and bigger picture bias will continue to be bullish, and our short-term bias will continue to be neutral, which means that we need to be flexible and open to the market moving in either direction and be much more mindful of the real-time intraday situation. On the upside, we have pre-market resistance at 58.8575 to 93.75, and holding below that zone would be a sign of weakness. And then if we get a breakdown below 58.74 to 77, that would be yet another indication that we are dealing with a weak market, and a breakdown below 58.74 can result in a test of initial support at 58.5 to 68.5, where buyers may still defend. But in the event that we are noticing excess weakness and big and sustained downside momentum, with the Russell breaking below its support at 22.31, then that would create the potential for a break below initial support, and a break and hold below 58.5 to 68.5 would serve as an intraday bearish indication, which can result in a test of the bias confirming zone at 58.43 to 54 and buyers may still be active there, but we will need to take the real-time intraday situation into account, because in the event that the markets are going directional to the downside, well, then even the bias confirming zone can get taken out, and a break and hold below 58.43 on signs of initiative selling would serve as an intraday bearish confirmation, and that can then lead to a test of 58.29 to 38 with potential to head lower into 58.11.5 to 18.5, and possibly 57.92 to 58.0375. And on the downside, the 58.11.5 to 18.5 and 57.92 to 58.0375 both mark the range extreme. So as I mentioned at the beginning of the video, since the markets do seem to be primed for a directional move, we need to be a bit more cautious on zone fades and really be mindful of that real-time intraday situation. So that is the market context and plan heading into the open. Let's see how the real-time situation shapes up and how ES behaves at the pre-market and initial support, as well as the pre-market and initial resistance zone. And let's also keep an eye on the Russell and the Nasdaq. That's going to help us determine our intraday bias, and we'll take it from there.